Hi everyone, my name is Karan Batra and I am from MyWay. So what is an SIP? An SIP stands for Systematic Investment Plan. It is a method which is used by investors to invest in different types of mutual funds. So how does an SIP work? So to start your SIP, you need to first select the mutual fund scheme that you would like to invest in. The same can be done basis the research that you've done or basis the advice that your advisor has given you. Second would be to fix the amount that you want to invest on a regular basis. Third is the date on which you want that the investment should go into the required scheme. Now to make sure that your investment happens on a monthly basis, you have to get your bank to approve your ECS mandate. Once the process is set in place, every month the fixed amount on the fixed date gets invested in the fixed scheme. Over a period of time, you're able to accumulate a lot of assets instead of investing in one shot. So why should somebody invest in SIP? So I'm sure you all are aware that the stock market is very volatile. It moves up and down on a daily basis. So an SIP is the best method to invest in a volatile market. With the help of an SIP, you're able to do rupee cost averaging. Let me explain that with an example. If you're investing 5,000 rupees on a monthly basis and in that particular month the markets have gone down, you end up getting more units for your 5,000 rupees. In the subsequent month, if the market moves up, your 5,000 rupees value has also gone up. So net, when you average out the cost of acquisition, your cost is much lower than the prevalent market price. Let me give you another example. If let's say you had invested 1 lakh as a one-time investment and at the time of the investment the market were at an all-time peak. Now you will have to wait for the markets to recover and make sure that you make money on that investment. But if you had done an SIP and even if your first investment would have been at an all-time high, your subsequent investments would have bought at a lower value, thus averaging your cost of investment. So now that we know that SIP is a great way of investing in mutual funds, so who is it best suited for? A first-time investor or a savvy customer? Our response would be it's best suited for both type of customers. For a first-time customer, he can start his SIP as low as 100 rupees and start getting exposure and understanding of the stock market. And for a savvy customer, it's a great way to do a disciplined way of investing. Now that we know SIP is a great way of investing in mutual funds, how do you start your SIP? So the first thing for that is you need to open your MyWay app, select the Build Wealth option. The next option would be for you to select an SIP or one time. Go ahead and select SIP. Post that you need to select the amount of investment that you want to do on a regular basis. Once you've fixed on the amount, and the amount could vary from as low as 100 rupees going all the way up to a couple of lakhs. Post that, the MyWay app, basis its proprietary research, will recommend mutual funds which are best suited basis your risk profile. Feel free to go through them. If you want, you can even make changes to them depending on your profile. Once you're comfortable with the mutual funds, you can go to the payment option. You can use either UPI, debit card or internet banking to start your first SIP. Once you've done your payment, the MyWay app will direct you towards your ECS mandate approval process. The same is required to make sure that on a monthly basis post this, your bank continues to debit and keeps investing in the required mutual fund which you have selected. All the best.